What could the elections do to the stock market? Well, in this video, we're going to review exactly that. This video is brought to you by Moomoo, but more on them later. Okay, let's get right into it. Here it is. So first, Predicted, which is a betting website for making bets on outcomes for certain events like elections. By the way, I've had the CEO on the channel. Phenomenal company, not sponsored by them, but we'll say great company. Really enjoyed their presence. They're suggesting that the odds of Senate party control have actually been skyrocketing here to the highest levels that we've basically seen since the summer. Right here in October of 2022. So we're just now within a week of the election, and we have almost certain Republican control of the Senate, over 70% according to Predicted. And when we look at House control, we've actually got House Republican control as high as 90% according to Predicted. Now, that's not necessarily the best way to predict outcomes, but I like looking at polling products where people are putting their money on the outcome. I believe they have a better outcome than just the random polls that polling places do. I mean, who remembers 538? Okay, need say no more. Anyway, if we have Republican control of just one of them, the policy implications are probably going to be, quite simply put, a legislative standstill. In either chamber, you get a legislative standstill across the board. Because remember, in order for legislation to get passed, it must go through the House, it must go through the Senate, and it must be signed by the president. Which means Republicans aren't going to get anything through unless the president is on board because, well, the president has to sign it, or the president can veto it, and there's not enough control for any kind of congressional supermajority. The courts can operate as they are. Now they're ruling on Trump's tax returns and affirmative action, but they're not going to legislate, although they may bench legislate with some of the things that we've even seen in the last 6 months here. But more importantly, nothing happens in Congress. And there's something interesting that happens when nothing happens in Congress after elections when it comes to the stock market. First is what happens after elections in general, and then what happens when Republicans take over. We've got data on both of these, all right? First, take a look at this. Since 1960, this has been the S&P 500's performance after elections. Okay, notice how none of the years after an election, this is 360 days right here, so none of the years after an election have we actually seen negative returns on the average. Again, this is an average, so that's not to say that there isn't a year. It's just on average, you don't see it, whether it is a midterm election, a presidential election, or the average of all elections. You consistently see positive returns. Again, no guarantees. We could see a negative because this is just the average. But look at how much your margin of safety is, that we're likely to see a positive next year in the S&P 500. After 60 days, almost in all cases, you were up about 5% on the S&P 500. And then your range of outcomes was anywhere between 7.5% to almost 10% here on average, to 15% to about 22%. So anywhere really between 7.5% to 22% potential average returns following elections. Okay, that's pretty bullish. That's a reason to actually be optimistic. And then you see, this is volatility following elections. I would say that if we were to draw, sort of an average or like a median here, it's very difficult to do so. If I just look at the gray line, I'd say the median VIX would be somewhere around 20, which isn't absolutely terrible, right? The VIX is sort of your fear index. We're sitting at 25 right now. So look at where we're sitting right now. Right now, we're at the green line. Let me draw these lines straight so it's a little easier. There we go. Perfect. So right now, we're at the green line. I'd say the average over here in this gray area would be this red line. probably also in that, actually probably your overall average is somewhere around closer to 19 to 20. So that's good. We expect volatility to come down somewhere around 25% on average, and on average, the S&P returns over the next year somewhere between 5 to 23%. Now, how about specific instances? Like, is there a difference between when Republicans take over versus when Democrats take over? Yes, there is. And I'm going to reveal that based on Citibank's research right after our message from our sponsor. Today's sponsor is Moomoo, one of the best stock trading platforms available. Moomoo offers countless amazing trading features that help you take your trading game to the next level. If you sign up using my link down below, you get up to 15 totally free stocks, each valued up to $2,000. Moomoo is also available for the Australian audience, so make sure to click either the US link or the Australian link. And what's neat about this is it gives you the opportunity to explore a new platform with amazing trading features and get free money for doing so. Not only 15 free stocks worth up to $2,000 each, but also $10 in cash back for every $100 deposit that you make with Moomoo, up to $50. That's incredible. So that means if you deposit $500, you will get $50 totally for free and up to 15 free stocks, each worth $2,000. This is a killer deal. Terms and conditions, of course, do apply, but learn more about Moomoo by using my link. Now, I have to say, I found this quite fascinating. Take a look at this chart here. It tells you that when Republicans controlled the Senate or the House, we generally ended the year with a positive 1.4% or positive 3.5%, roughly similar to the Democratic Senate, although that was a little higher, and Democratic House over here. These are kind of nominal bumps right here by the end of the year. So you're not expecting an immediate rally. But look at the next year. I don't really care if you're a Democrat or a Republican. These numbers are great. Your average return was between 17.7% all the way up to 23.8%, no matter what happened. Now, if you got a Republican president, you actually had a slower end of the year, but you had a bigger on average S&P move thereafter. If you had all Republican control, you tended to have nearly a 30% one-year return. Incredible. That's substantially more than the Democrat control here, although that would be in the one-year out time frame. Now, but what we're looking for is the Senate, changing from D to R. Look at this, okay? Senate change from Democrat to Republican. Almost no move on average by the end of the year, but about a 19.5% average S&P return after a year. That means if you have a stock that's trading at a 2 times beta, like a Tesla, you could see a 40% average return in a year. No guarantees. Obviously, pick a single stock, anything could happen. But that's incredible. Now, House change from D to R, also 19.9% within a year. Notice one thing. Nothing on the right side is negative, and almost nothing is negative on the left side. The left side, again, is till year end. See that right here, year end. And then this is the year after. All right. What if you have gridlock versus a split House and Senate? Oh, look, doesn't even matter. Gridlock was great with an average return of 19%. This is really exciting. Like both of these charts create bullishness. Now, if you want to look at segments individually, I'm not going to break these down, but you can. You could just take a screenshot of that. That's fine with me. But let's look at some of the sort of the bottom line that Citi provides here. Our underlying view is that the election effects will be secondary to the focus on Fed rate policy, inflation, and recession risk. Darn. They have to buzzkill. Yes. Yes, they do. So I just want to be very clear. Even though I know probably 40% of people have already dropped off of the video, that's their problem for not sticking around. I can't help it when people leave videos and miss good information. But as bullish as this information seems, we're still subject to what the frickin' Fed is up to. And unfortunately, that sucks. because the Fed's up to nothing great for stocks right now. It's all about squeezing the market down. And inflation has been relatively sticky, unless, of course, you subtract shelter inflation, which helps get our core inflation to zero, which is phenomenal. But, you know, unfortunately, that's just not the way the Fed looks at it. If they shifted and started looking at it that way, ooh, that would look good. Anyway, we'll see. Additionally, Citibank goes on to say here that media and entertainment, semiconductors, and materials are signaling more fundamental confidence under GOP control, while energy and materials have outperformed alongside Democratic control. Okay, so you're not really going to have control of either. It's going to be split, right? So I'm not too sure this matters much, since we're probably going to go to some form of a split here. And the average return for the S&P 500 in the year following the midterm election is 20+%. Strong returns are evident regardless of party control. We saw that. And they view this as basically a positive tail risk rather than a core input for next year, mostly because got the Fed. You're dealing with the Fed. You're dealing with Russia and Ukraine. You're dealing with a lot of disasters, right? An ongoing environmental focus has evolved and remained front and center. The Russia-Ukraine disaster is evolving. You've still got the COVID-0 nightmare in China, although you did have some bullishness that, you know, some unconfirmed rumored reports that, hey, maybe China's creating a committee to get out of their COVID-0 process. But I'd say overall, interesting research. Certainly a reason to be bullish for the next year, and I'm excited about that. Thanks for watching, and folks, we'll see you in the next one. Bye.